Hello and a very warm welcome to this week's Policy Watch, our weekly program that analyzes all the major economic developments of the week. This week we kick off our discussions with a look at India's fourth quarter GDP numbers that were released earlier in the day. We then move on to the OECD's report that shows that India is now the third largest economy in PPP terms, that is purchasing power parity terms. And finally, we will close with the ongoing controversy over gas pricing, with ministries at loggerheads with each other. Muddying the waters is the presence of a large and powerful corporate player in the sector, and that brings with it the inevitable share of controversy. I'm Mythili, and joining me in these discussions is Subhomoy Bhattacharjee, Deputy Editor, Indian Express. Welcome to the show, Subhomoy. There are few macroeconomic numbers that are watched more carefully than the GDP numbers of the economy.
Indian economy grew 4.8% in the January-March quarter, slightly better than the 4.7% recorded in the previous 3 months. The GDP growth for the entire year is 5% in line with the estimate put forward in the Union Budget. The data released on Friday showed that agriculture grew by 1.4% and manufacturing by 2.6%. The service sector, which accounts for more than half of the GDP, expanded 6.6% in the quarter. Years of high inflation, high interest rates and a downturn in global economy are blamed for the poor performance by the country's economy.
Subhomoy, we heard the numbers. What is your take? Should we be happy that we've got 5%, which is what everybody anticipated? Or should we be unhappy that this is a decadal low? So is the story of the India shining story, 9% growth, is that all that history now?
Yeah, good point, Mythili. In fact, this morning after the GDP numbers came out, industry chambers and analysts, they were all sending in the reports. And one of the first sentence for all of them was that Indian growth slowdown is probably bottoming out. So that seems to be the only, right now, the major straw that the people want to hold on to, that probably the worst is over. The 9%, yes, definitely we aren't going to see that for quite a long time. But whether we are out of the depths, out of the woods, is what everybody wants to have a feel about. Yesterday, the RBI governor didn't actually make us feel very comfortable. I mean, he said that the upside risks are all still there.
Absolutely.
And obviously, he is privy to these numbers. So with that, the fact that the numbers are still not showing any discernible changes happening, except for the fact that they're not worse than what was happening last quarter. So that's where just we stand.
So 4.8% in the fourth quarter, 4.7% in the third quarter, given the fact that our data is very often, proven completely wrong, way off, and there are huge revisions, can we really be sure that it's bottoming out? A 0.1% difference in GDP? Should we really think that things are okay now, we're now on the path to recovery, however slow and painful? Or should we feel that, no, it's still pretty bad and things could get worse, particularly if you look at the current account deficit numbers and the report also that Indians are still consuming and importing a large amount of gold, in which case we may have a much higher current account deficit. Can we be really thinking in terms of a recovery?
Yeah, Mythili, in fact, you have been writing extensively on these issues, and I was just sort of looking at sometimes the comments that you've made. Incidentally, the GDP numbers, as we both have been saying, this particular estimate comes essentially from the IIP numbers.
Absolutely.
They're blowing up the IIP numbers. That's what gives the GDP. So obviously, for instance, the SME production, which comes from the SSI data, now that is not yet incorporated. That will come later in the year. So that is something that will definitely add a bit of a trigger to the industry numbers. So we could see a revision there. How much is, of course, a point, but definitely there would be a revision. So yes, there is an underlying measure of consumption that has not been looked at. So, but even doing all that figures, there still doesn't seem too much to expect that the numbers would substantially change. At best, 4.8, maybe 5. Could be 5.01, I mean, in terms of the third or the fourth decimal. But I wouldn't expect it really to go further than that.
So that's almost a halving of a growth. If you remember 2010-11, we actually reached 9.3%. So from there to slip down to even 5 or 5.1 or 2 is pretty sad. And one more question, Subhomoy. These are the aggregate numbers. But if you look at the disaggregated numbers, what is particularly disheartening is agriculture's performance. Now, agriculture contributes a very small part of the GDP. But in terms of the numbers dependent on agriculture, it's still very large. Almost 60% of the population still depends on agriculture. And there we find agricultural growth for the entire year is only 1.9, and the CSO advanced estimates were 3.6. Now, in terms of human distress, how significant would this be?
It is. It's a considerably big one, and considering that our manufacturing sector is almost at the cusp of a deceleration, this means that other than services, there's absolutely nothing happening in the economy. And as you pointed out, 1.9%, if you look at the value add that's happening in agriculture over the last, and this was a year when monsoon wasn't particularly bad.
Absolutely.
Despite that, we really haven't moved forward. Now, here again, there is of course a possibility that some of the numbers could be corrected, but the Rabi estimates are already in. So essentially, there isn't much chance that those numbers could be substantially changed. So yes, there is a problem, and this problem, I have a feeling that, you know, in India, what will happen is if you talk of migration and all that, probably this would start looking up in the NREGA numbers.
Okay.
There would be, we could see a spike now, because this is not a drought-related spike, but it will be a spike from the fact that the agriculture is really not providing, even in a good year, adequate amount of life support to 60% of the Indian population.
And possibly that might be one of the reasons why food inflation was so high, because we kept saying that why is food inflation so high? So is it possible that actually production itself was not there very high, it wasn't doing very well to begin with, and then government was procuring such a large amount of food grain. So whatever little supply was available in the market itself was being drawn away.
Absolutely.
So could that perhaps explain some of the food inflation?
Could. In fact, but I would think that the partial reason for the food inflation is the fact that we have been pushing in that MSP. Okay. I mean, 170 to 180% rise in the last 10 years in mining minimum support price is too much. As a result of that, the terms of trade between agriculture and industry has totally turned in favor of agriculture. And that is not something that is very comfortable for an economy that is trying to push its growth momentum, which means that we have set a floor of wage price. We have got an inflation which is therefore not really pushing back, and in the middle of that, the economy, rest of the sectors are not really giving the kicker that they need to give.
One other sector whose performance has been pretty dismal, both this year as well as the last, when I say this year, I mean the last fiscal actually, 2012-13 and the previous year, is mining. In both the years, actually output declined by 0.6%. And if you look at it, the fourth quarter is actually minus 3.4.
Yes.
That means mining not only has it done badly, it's doing worse in the recent months. So despite the fact that the Supreme Court has in fact allowed mining to resume in certain, certain pockets, etc., why is mining so distressing?
Yeah, one of course is that the Supreme Court order came pretty late in the day. I mean, by the time it came along, the year had passed. So there wasn't much of a chance that those numbers would show. Also the fact that mining is one of the first places of migration from agricultural labor. So essentially, slowdown there means that one avenue for agricultural labor to move out gets blocked.
Absolutely.
So that's something very serious. Also the fact that the mining sector, I mean, the only sector where mining, there has been some improvement, has been a little bit of improvement in coal. It's gone up from 435 million tons, Coal India figures, to 452. But crude and gas have both decelerated, domestic production. And in terms of the other sectors, there isn't anything happening. So yes, there is several amount of sectors which are not only weak, but are also not showing immediate signs that they are turning around.
But there's just one slight silver lining, Subhomoy, pretty dismal picture all around, as you've said. But there's just one small silver lining, which is actually manufacturing. If you look at the quarter-on-quarter numbers, actually the past 4 quarters, each quarter has shown a slight improvement from minus 0.1 to 0.1 to 2.5 to 2.6. So can we really hope that maybe manufacturing is looking up? And if that happens, one of the big issues of jobless growth may be addressed?
Well, one could, but the base is still very narrow. Out of those, if you look at the 2-digit classification, the sectors that are showing the upside is very narrow at the present, and that is not something which is, and even within there, the sectors which are showing are like chemicals, which are basically heavy capital intensive sectors. So there you don't get much of jobs. The sectors which really put in the job, for instance, construction, that has decelerated. I mean, it's not decelerated, it's not a negative region, but the fact is that it's definitely done worse than last year.
Absolutely.
Now, construction has, in the last 10 years, provided more employment than the manufacturing sector, or almost about the same. Now, if that is the case, then if construction is decelerated, then the jobless growth problem is right on at a doorstep.
So that's a pretty dismal ending to this part of our discussion, but please don't get worried about it, because we've got a better story coming up. We'll come back with you, but at this point of time, we have to take a short break. Please bear with us. There's a much happier story on the other side of the break. Welcome back. As I said, our second story is on a much happier note. In a world that's fixated about ranking, it doesn't matter if you've done well. What matters is whether you've done better than the others. So there the OECD's report that India has overtaken Japan to become the third largest economy comes as a shot in the arm. According to the OECD, though Japan's GDP is 3 times that of India's in nominal dollar terms, if you factor in the difference in the purchasing power of the two currencies, well then India's GDP is bigger than Japan's. So though India is only the 9th largest economy in terms of nominal GDP, we're now perhaps the third largest rather after China according to PPP. Of course, it's a different matter that when you look at the numbers in terms of the per capita income, then whether it's in nominal terms or whether it's in PPP terms, we're far at the bottom of the league. Then the picture changes quite dramatically. Thanks to our large population of 1.2 billion, we are 141 in the league tables in nominal terms and move up only to 130 in PPP terms. Before we plunge into discussion with Subhomoy, let's take a look at the OECD report.
India is the 10th largest economy of the world in terms of nominal GDP or the value of all goods and services produced by an economy. The Paris-based OECD has suggested that the country may have become the third largest economy in terms of purchasing power parity behind the US and China. Purchasing power parity is the measure of a currency's real purchasing power. It is estimated by assessing the amounts of money needed to purchase the same goods and services in different countries. In nominal GDP terms, India ranks third in Asia after China and Japan. The Paris-based organization has scaled down its growth estimate for India to 5.3%. It is even more pessimistic about the global recovery.
Today, we're still confronted with an outlook that remains weak and a recovery that continues to be hesitant and uneven across countries and regions. Now, there are some encouraging signs coming from a pickup in activity in the United States.
OECD expects China to replace the US as the world's largest economy in a few years. It also projects that by the early 2030s, the combined GDP of Brazil, Russia, India, Indonesia, China and South Africa would be roughly equal to that of the OECD. At present, the BRICS economies together amount to less than half of the OECD's economic might. Bureau Report, Rajya Sabha TV.
Well, Subhomoy, we heard that report, and the OECD has given us good news as well as bad. On the one hand, they say we're not going to grow faster. In fact, we're going to grow slower this year and the next also perhaps. But at the same time, they said in terms of ranking, we've improved. So what is it? Is it good news or is it bad? Is the glass half full or is it half empty?
Yeah, I suppose so, Mythili. I suppose one way of looking at it is that in terms of stock, we are there. But that's basically, you know, the hosannas from the last last one decade up till 2007-8, when we sort of seem to have been getting our story right. That's what is sort of taking it on. But from there on, we seem to have done practically everything wrong. So essentially, yes, the fact that the world isn't particularly growing fast, it isn't expected to for the next part of the decade. So yes, we definitely would be there. But that would still be a problem in terms of the fact that this isn't trickling down to the rest of the economy. So essentially, if a person says, what is it there in it for me? There's very little that we can turn around to say, well, this is there. I mean, these are the good things that's coming.
So is there anything to celebrate? Okay, we're now the third largest economy. Does it really make a difference in terms of geopolitical power, in terms of anything else? Or it doesn't really matter, we're still a poor, struggling economy?
Well, not really. I mean, you're right that it's that there is a lot of weaknesses there, and the GDP numbers that we discussed showed those. But there's also the fact that the FI investment into India this year, for instance, has been at a very high clip. Now, obviously, the reason why they're coming in is because they see some very good companies, and they're not just investing in the BSE Sensex. They're investing in almost the entire BSE 100 range. So there is a lot of companies that have come in. For instance, recently, SEBI has said that minimum float has to be 25% for all companies. So a large amount of shares came in, and all those shares sailed through, which means the markets have become big. Now, what does that do for the rest of the economy? It just shows that there is a good amount of pressure or good amount of buoyancy that is being factored in. When that will be rolling out is difficult to say, but obviously the portents are not bad. There is enough there for the economy to take and run, and with the good numbers, those could happen. The point is that we are playing below potential.
Oh, that of course, we are playing way below potential. But what can the government do really to improve? Is it all a question of policy paralysis? If you look at the numbers, actually India, even though we may say we're third, the gaps between India, China and between China and the US, and mind you, the OECD has said that China will soon overtake the US. And of course, they've also said that India will at some point of time overtake China. But do these things really work in a linear fashion? Remember, there was a BRICS report which said, oh, India is really going to set on a high pace of growth. And then we've seen that we took 2 steps forward, one step back. So can we really be sure that, this is what's there in it for us really?
Yeah, there would be something. One of the things that I get particularly interested in is, 2 sectors, power and coal. In power sector, till about a year ago, we didn't think it's possible to make a turnaround.
Absolutely.
But look at the states that have actually moved on to do power sector reforms. Now, the reason why they can also do the reforms is also because their balance sheets have improved.
Absolutely.
So the states have not gone into problems like the last time when they did a power sector reforms. The states are doing it, they're doing it comfortably, they are willing to do one more round. Now, that is something very solid, very impressive that all the states and the center, the companies, the power companies have all got together, and this is a very major reform that's happened in India, and I'm quite sure this is going to happen. I mean, going to help the economy. At the other end, there's also Coal India, which is a government-run company. It has got a presidential directive, and yet nothing much has happened. So obviously, the portents, or rather the ability to do things, does rest with the government. If it wants, it can get things done, and that is where I suppose the story has to be.
But then there is also the issue of global slowdown. How much faster can we grow when the entire world itself is not growing much, and India is much more globalized today than before? So how much lies in our own hands, and how much are we, a victim, or whatever you want to call it, of destiny, or what's happening abroad?
Yeah, but when we were down in 2009, when we were when we were up post 2008, it didn't seem that we had done badly and we're going along. The story going around was that we had decoupled. The Indian economy can actually run on its own steam. Now when there's deceleration, to turn around and say, no, actually we were coupled, and that has resulted in deceleration, doesn't really seem right as an analysis. Rather, it seems that it's rather, sort of a quick response to situation rather than trying to look it through. I think the problem, as we were discussing, lies with the fact that governance in India is a very major economic determinant. Absolutely. And that has to be solved in terms of critical interventions in sectors where they need to be done. And if those are not done, then the benefits of the global tailwind will not be there. And if there's a headwind from the global markets, then we actually create add to it by having a leaky boat.
So being number 3 doesn't really make a difference unless you do something to improve the quality of that number 3. I think that really is the basic takeaway. So on that point, we'll take a small break, but please do stay with us. We'll soon be coming back. Welcome back. There's a battle royal brewing over the pricing of bulk gas in India, as the prices are determined by the government. Several stakeholders are fighting over different issues, but all of them stem from the same issue of pricing.
Indian policymakers are facing a tough choice over gas prices. Domestic gas producers, Reliance Industries and ONGC are seeking higher prices, while fertilizer and power producers are against it. Last time gas prices were raised in June 2010. Rangarajan committee appointed by the PMO submitted its recommendation that were not liked by the producers. So the oil ministry promptly appointed another committee, the Kelkar committee, to help formulate its view. Matters have got murkier with the terms of reference of the Kelkar committee being revised twice. What makes the issue contentious is the presence of the whole variety of combatants pulling in different directions.
Subhomoy, at the cost of sounding a little flippant, is that all just so much gas? Why are we sitting over here and discussing government getting into pricing of anything gas? I thought that 1991 was a great reform. We liberalized the economy. In fact, even in the case of oil sector, the government has very hesitantly but taken the steps to deregulate, etc. So why are we going back and talking about government fixing the price of gas?
I know, it sounds fairly bizarre. There's no particular reason. And if it has to do, there's a regulator there. whose terms have not been properly defined, but ideally that is a regulator who should be deciding on the pricing. There's no reason why the government should do it. The last time we did it, it went up to a court battle and the court decided on it, and based on that the EGM took a decision. And there, of course, there was a peculiar problem because it was decided by the courts that since the government is the owner of the natural resources and the companies are basically the sort of the contractor, so the pricing and others will be decided by the government, which didn't say, I mean, it sort of seems retrograde because that's not the principle that we are following in other cases. So yes, you're right. There is no reason why the government or a government committee should be deciding on the price of natural resource. It should be a market-led discovery.
I think the argument that is given by those who advocate government interference, quote unquote, is that, there isn't a market for gas. There are only limited number of players given the amount of investment that is required. You have a few people who are producers. You have perhaps a little bit more in terms of consumers, but they're at the receiving end. So you have to ensure that government gets into the act to decide, which is why they appointed the Rangarajan committee. And if you look at it, it's very similar to what happened in the case of steel some years ago. You had the producers on one side and then you had the users on the other side. And the producers wanted as high a price as possible. The users naturally wanted as low a price as possible. So should the government really leave it to market forces, in which case, who are the users? Fertilizer, power, all very critical sectors for the economy. So should you really ensure that somebody, whether it's government or another party, maybe the regulator, which as you say is not empowered, but should there be a third party deciding the price? Because you have more, very few producers, one large corporate producer, one large public sector player, and fertilizer, power sector, companies desperately seeking that gas. So is there really a case? Should one not be so fixated and be a free market fundamentalist, as some people call us?
Maybe, but my problem out here is that as you've obviously showing, Mythili, that you also would believe that the market pricing is the right thing to go about. And that is where it should stand, because no matter whether you have got a monopoly producer or not, as we have seen in the case of, for instance, coal pricing, a monopoly producer in coal isn't necessarily pricing it right, and companies have got into trouble. So there is, but yet at that place, it is taking the resource or the help of companies abroad, prices abroad, to determine the price of coal. Now let's look at the gas sector also. In oil also, just as in gas, there is an international price that can be the benchmark. So we could try to look at those prices. The Rangarajan committee also says that in 5 years, we will be moving to a market determined price. Even now, the price that the Rangarajan committee has set, the dispute that is being created by the fertilizer companies and the power companies is that the price is either too high or too low. That's the issue. It's high. I mean,
for them, it's obviously they say it's high.
Yeah, but they are also saying that there is an international price that can be discovered. In fact, their problem is not that the price isn't there. Yeah. There's a Henry Hub price. There is a price which there are other prices, the netback prices, which those prices could be discovered at the oil fields, and the same could be used. Which one would be the correct one has to be a process of trial and error. But the decades of pricing experience that we have had for fertilizer companies, where the government did a series of gold plating process, old planes, I mean, there are lots of formula that did, which never satisfied any of the fertilizer companies, will come back to haunt us if we don't get away from a pricing regime set by the government.
Except that one last point, if I may make, playing devil's advocate. Unlike in the case of coal, where you can import, it's much more difficult to import gas, because LNG, we don't have sufficient terminals. So there are issues about distribution. We don't have enough gas pipelines. But I think this is a discussion which we'll have to take it up all by itself, because there's so much to discuss on this, Subhomoy. And with that, I think we need to kind of take away what are the key wrap-ups from this particular discussion that we've had. Well, we talked about GDP, and I think both Subhomoy and I are pretty despondent. Unfortunately, there are more, the glass is more half empty than half full. Very slight silver lining in manufacturing, but not sufficient to take away from the downside of agriculture. And the OECD report, yes, it's good to say you're number 3, but what kind of number 3 are you? That is also important. On gas pricing, as I said, it's much too complicated, and Subhomoy agrees, though we would like to have a free market for gas, is it so difficult when there's so much gas all around? And with that, I think we come to the end of this program of Policy Watch. Thank you so much for being with us. Thank you, Subhomoy, for taking part in this discussion and enlightening all our viewers. Thank you.